Hey, it's Clayton. This will be the weekly review of the Power Profit Scan newsletter, which is a portion of the Inner Circle subscription that I offer at the site claytrader.com. Real quick, before I go any further, I want to get my typical disclosures out of the way. First off, I am not trying to imply or come across like every single alert that I send out turns out to be a big winner or anything like that. If you've watched any of the past videos in this series, then you've seen me show plenty of losing alerts that are just kind of annoying and work out but don't quite work out, and you've seen everything. If you're new though, I do want to still throw that out there that I don't want to, I'm not trying to say that, hey, sign up and you're never ever going to lose again. That's not the point. What the point is that losing trades do happen, but this is why risk management is so important, because while losing trades do happen, winning trades also happen. So when those winning trades do come along, you want to make sure that you have your account in the proper area and the proper kind of position, that those wins are going to keep your trend in an overall consistent uptrend. So that's the point here. Not that I am perfect or anything that I am doing is perfect, but just really to illustrate why the risk management, risk control, risk analysis is so important. Second, as far as where we're going to be going back and reviewing, we will be going back and looking at the weekly newsletter from the week of May 27th. Why so far back in a time? That is more than a fair question. Two reasons. First off, going back to May 27th has given the chart plenty of time to play out. That way we see what happens. Second, just a matter of being fair. The last thing I would want is for somebody to sign up, which does require a payment, and then all of a sudden see what they just paid for out there for free on YouTube. Those people would feel ripped off, and I'd see where they're coming from. So just a matter of being fair. So with that being said, let's get started. A couple of questions I always get. Hey, Clay, what price range do you cover? And I cover anything. Price to me is very, very little in terms of significance. I care about many other factors that are going to lead to the probability of potential success. So sure, I factor in price, but it's very far down the the line. And again, for those of you that have watched past videos, you've seen some of these where I'm talking about a stock that's up over $150, and the next stock I'm talking about is down below a penny. So like I said, price very low down the priority list. It's all about trying to find things with as many things aligned that will lead to a successful trade as possible. Second, when are these sent out? They are sent out over the weekend, so you have plenty of time to look things over and make decisions and just think through things. Nothing like a text message where you have to think super, super fast and then go make a decision. Nothing like that at all. So those questions always come up, so I want to get them out of the way here. But let's take a look at the first one here. And the first we're going to talk about is right here. You can see called a pullback play, and then ARQL. So you can see right here, just pretty much said that a pullback might be coming, looking like that was likely, but the overall trend was still nice. So let's see how this one played out. So here's what the chart was going into the weekend. So let's see what happened. Like I said, the whole idea was looking like a pullback was coming, and there was indeed that first pullback candle, but still didn't quite get down to that green line, which is where I hinted at a potential entry point. And you can see right there, beautifully went down there, hit technically, I know it looks like it bounced directly off that green line, but actually went a few pennies down below it. But still, point being, opportunity 2 days in a row to get an entry point right down there around the 675 mark. And then you can see from there, made a very, very nice move up and then pulled back right there. So that would have ended the trade. So that was good for 14.5%. I'm not saying anybody played it perfectly, but even if you screwed up half the trade and still got 7% out of it, 7% in basically a week, not going to happen at your local bank. If you don't believe me, I would highly recommend you walk into your local bank, credit union, and say, excuse me, ma'am, excuse me, sir, I would like 7% return on my money in the next 7 days. They're going to look at you like you're a crazy person. They'll say, hey, we have a bank CD that'll pay you 2.8% for the next year, but did you say 7% in 1 week? So 7%, I get it. Not a huge amount, but it is what it is. But what I like about this example in a sick and twisted type of way, because from a marketing standpoint, it would be great if this thing would have just kept skyrocketing up. But from an educational standpoint, sometimes things like this happen where it's not like it was a bad trade. It's not like it was a losing trade at all. But something will pull back, behave in that manner, and then all of a sudden, boom. Totally turn around and then just keep on going up and up and up. And that's where and it's not done going up, it looks like at this point. So to think that it was alerted down here, could have gotten here, but this annoying little movement right here, pretty much the fake pullback, which was not true, but odds are would have knocked anybody out of the trade that got in up around the 675 mark and then decides to skyrocket upwards. You know what? If that's ever happened to you, you're not alone. It happens to everybody. So again, does that make this a losing trade? No, it just makes it one of those annoying trades that was a winner, But, the price just had to act like that before all of a sudden it makes a move in the upwards direction. So, like I said, learning-wise, great example. You're not alone if that's ever happened to you. It happens to everybody. The next one to focus on here is KPTI. And this one was in pretty much throughout there, is this some sort of start of a bigger breakout? As I mentioned here, it's gotten up above this red line, but I use the word, a bit sketchy because it just doesn't seem totally clean. It seems like it could have been a better breakout. So definitely, the attitude of let's play things a little cautiously going into this one. And the big lesson here, and I'm going to turn this into a miniature lesson, is how knowledge pays. And people say, well, you got to have knowledge. You got to invest in your knowledge. You got to invest in learning. And this is exactly why. This is exactly how. Now, before I also go any further, a quick little mini disclosure. What I'm going to talk about is very, very simple, but I just want to, it is simple, but there is more that goes into it because what I say should have been done in this case shouldn't always be done because sometimes it just doesn't make sense. It does make sense in this case, but that's not always the case. Now, I can't go into why and how and all that right now, but just understand that what I talk about, the little lesson I give, is definitely worthwhile. But like I said, if only it were this easy all the time, there's other factors that would need to be considered, and all those other factors, for time's sake, I'm not going to go into them here. But still, my overall idea here is just to show how knowledge really does pay, and having a general knowledge and being able to think for yourself can lead to some nice movement. So in the world of trading, a very famous moving average out there is the 50-day moving average, which on my chart here is denoted by that blue line there. And then there's another rule that states when resistances are broken, they tend to act as support. So you can see right here that blue line, a couple times acted as resistance. Fast forward again, acted as resistance a couple more times right there. And then the price broke above it. And the rule states, like I said, resistances are broken, they tend to act as support. And right there, you can see that blue line turned right into support. So you have the 50-day moving average, which, like I said, a lot of people just put on their chart. So call it a self-fulfilling prophecy, call it whatever you want. That's a very famous level. And then it's already acted in this way. So it's very logical where if there are any pullbacks, well, why wouldn't you buy there? It's already acted as support. Again, there is more in some cases, even if all these dynamics have occurred, it still doesn't make sense to do it. But that's not where I'm we can't go down all those different rabbit holes. But just from an overall idea, just to show that I'm not going to make up this entry point, it does make sense to have done, what I'm going to show here. So first thing right there, you can see that, yeah, the sketchy breakout that I was talking about, once again, just didn't really do anything, then gave us a little clue with the red candle. So yeah, maybe that can't, or maybe that breakout's not going to actually sustain itself. And once again, nothing much happens. The reason it changed was because I can do that again. So let's see. So again, right there, just kind of consolidating. So nothing right there, no power behind the breakout. But then right there, check it out. Price pulls back, and oh look, history repeats itself. It bounces right off that 50-day. Right there, didn't hit it exactly, but right around that area. So I'm going to fast forward things here a little bit. So, you could have easily gotten in down around there. And then just like that, look at that one more time, went down there, right off of that blue line again. And then ba-boom. And that is where things actually stand right now as of the recording of this video. So who knows how high this is actually going to go. But that's already worth 76.2%. Again, let's say you screwed up half the trade, and let's just call it 35%. 35% for a month. Like I said, walk into your local bank and request 35% for a month. Let's just go conservative. Let's say 2 months. You will probably be escorted out by security for being a crazy person. But right there, the power of knowledge. What I explained there was nothing illogical at all. But please, again, you can if you want, but just don't come yelling at me like, oh, you scam me. You don't just go out there and be like, hey, I'm going to buy every time the price hits the 50-day moving average. If only trading were that easy. There's other dynamics that goes into it. But point here, like I said, general knowledge, patience, it really does pay. And here's an example where, yeah, there was never a breakout. But by just being able to think for yourself and identifying a new trade plan, it would have led with some patience to a very, very nice gain, which who knows, might be getting even bigger. But I just don't know as of the recording of this video. And then the final one we're going to look at here, I know I usually go over more than 3, but given been doing a kind of little miniature educational lessons. I figured we'll just keep it at 3. But here was ONVO, and the whole idea was, is a dead cat coming? Dead cat being some sort of bounce that doesn't really maintain itself, though. So pretty much a fake bounce. And that's the thing with trading. You can have a stock that's downtrending, but if it's doing this along the way, these would be the dead cat bounces right there, where the price makes a move up, but then it ultimately just rolls back over. So let's see if that played out here or not. Great thing here is not much patience was required at all, which goes to show every trade can be so unique. So here was the chart, as you just saw, and you can see right there a big gap up, and then after the gap up, the price pulled back some more. Now, I'm not basing any calculations off of saying anybody nailed, the bottom down here at 38 cents, but, right up around here, 43, 44, 45, 46, right around this area, more than logical to have gotten in, especially from a risk versus reward play. I mean, there's some very evident areas where you'd have a stop loss and all that sort of good stuff. So from a risk-reward planning perspective, very logical to say, got in right up here around 45 cents, and then let's see what happens. Just like that, look at that. Not much patience was required. Look at this volume pouring in. And then good old dead cat bounce came right back down. But that move right there in just a matter of days, good for 133%. Again, not saying anybody played it perfectly. Let's say you screwed up half the trade. So that's still a good 65%. 65% for, let's just call it a week. It wasn't even a week, but we'll just call it that. 65% in 1 week. You're definitely not going to get that at your local bank. So a great week for members. Now, granted, the assumption would be you'd still need to be able to think for yourself in some ways and have some general knowledge. But overall, great week for members. If you are interested in joining, then you can go to claytrader.com/team down there. And you do get a lot more than just the newsletter. The other big thing is the live chat room, where there's alerts and watch lists given out by me every single morning, and I make alerts as the day plays out. And so that's the other big dynamic, is the newsletter and then the live chat room. There's also a mobile app, so it's not like you have to stay chained to your computer or handcuffed to any sort of tablet or anything. You can stay totally in touch with your phone or whatever, no matter where you are. So that's another popular attribute of it right there. And with the pricing at $99 for 3 months, the question becomes, okay, if I invest $99, can I make $8.25, not per day, but per week? If you think that the service can assist you in making more than $8.25 per week, then it's a no-brainer. And yeah, I'm not exactly setting the bar high when it's just got to be $8.25 per week. So if you think it can help you with that, then there you go. That's how you run the numbers to see if it's worthwhile making that a $99 investment or not. The numbers become even less if you go for the full year right there, because you get 3 months free. But just using the quote-unquote higher amount at $8.25, that is where the $99 mark comes from. So go get signed up, and I'll see you on the inside.